So let's be very objective in our analysis, even when we disagree. It's 83. Okay, they say it's even more. So you see. Thank you, my brother. It's good to have people like Dr. Fashua in the room. So this is the driver of our recommendation. Let me now go back to, this is the current regime of VAT, and this is what we are proposing. So I just explained this. There are also other states that are collecting consumption tax, entertainment tax, hotel center, event center, taxes. They've invented different names for them. We think it's not appropriate for there to be more than one consumption tax per time. So we're encouraging the states to discontinue with their consumption tax. Of course, you would imagine the hardest to convince should be Lagos State. But I have to put this on record every time. Lagos State has been very supportive. They even gave us the numbers of, and I said, tell me how much you are collecting from consumption tax. It's actually not a lot of money. Of course, it will be a lot for smaller states. But by Lagos State standard, these numbers are barely 1 billion a month. So it's actually small. Say, why don't we just get rid of this other consumption tax? Let's just focus on VAT alone. To make it a sweetener for them, say to the federal government, please, can you cede 5% of your VAT revenue to states? So the federal government collects 15%. Say, start collecting 10. Let's give the extra 5% to states. When we did the maths, based on the VAT collection trend for 2024, that 5% is going to be close to 350 billion naira. It is more than 5 times everything the states are collecting from the consumption taxes. So honestly, if someone does not agree with our reforms, they have something else in mind that they're not telling us. So the other thing is, businesses carry the burden of VAT. We've discussed that. Small businesses have smaller thresholds, so they have the burden. We've raised it. With our threshold, 97% will no longer have to worry about VAT. VAT refund takes forever. I spent over 20 years in the private sector doing consulting. I got tax refund only once in my entire career. In South Africa, you get refunds in 72 hours. Right? They proudly put the number of hours there. It's too embarrassing to put it in days. 3 days. In Rwanda, you get it before you apply. They just see your account and they see that your input is more than your, they credit you. Yeah, they just like, it must be that you are asking us to pay you, but you haven't had the time to ask. Yes. I'm extremely, extremely proud of Rwanda. They're the most impressive of all the countries, including foreign countries. Of all the countries we understudied, Rwanda Revenue Service is the most impressive. The way those guys use data is unbelievable. They even have how they categorize taxpayers. So this default payment is level A. So if you're a very compliant taxpayer, you get refund before you ask for it. And I think we can do that in Nigeria. Let's reward doing the right thing. Then we are saying under our reforms that government should pay VAT refund without an audit. You know where the biggest problem is the audit. The audit does not have beginning, does not have end. Is VAT refund you want? We ask you for withholding tax schedule, PAYE, company ledgers. What are we asking for? What are you asking us? Sometimes when you are frustrated, you now say, I apologize for asking for this refund. You can't build trust like that. So we're saying, pay refund before you find out, before you ask questions. But we also know that we can't just say everybody is honest. What we have now done is increase the penalty for making false claims. God help you, you go and do false claim. You pay the penalty, you pay the interest. The penalty is huge. So which means on your own, do your audit before you come and ask for refund. Right? You can get experts to help you if you are not sure what it is. Then exports, only goods are zero rated. So we are saying zero rate everything, services, exports, intellectual property, incorporeal, anything we are exporting other than oil and gas should be zero rated. Then we fight evasion by using fiscalization. So this is the story of our VAT reform. How about the revenue sharing formula? I know it's really not your problem because CFOs are not bothered about how you're sharing between government is the least of the problem of tax consultants and CFOs. But it's good for you to know. Today in Nigeria, VAT revenue is shared 15% to federal government, 50% to state, and 35% to local government. In 1986, the military introduced sales tax to be collected by states. 5 years down the line, in 1991, states were struggling. They were not making any headway. The military set up a committee headed by the late former president of ICANN, Ijewere. Military said, why is this sales tax not working? Should we be thinking about VAT? The committee worked and came up with their finding and said to the government, VAT will be a better tax to collect, but only if it is collected centrally, not by states, because it has input, output, and so many complications that the state cannot deal with. So the military agreed with them, and in 1993, the value-added tax decree was promulgated. And the implementation commenced in 1994. It was collected centrally, and the federal government kept 15% to cater for the administration, capacity building, whatever you want to think about, and to give 85% to the subnational. By 1999, we have the Fourth Republic. We needed a constitution that the military had suspended. They put some Nigerians together, and those Nigerians went into 1979 constitution and replicated it. In 1979, there wasn't VAT. By 1999, we had operated VAT for 5 years, and it was becoming our top revenue yielding tax in Nigeria. But they forgot to put VAT inside the 1999 constitution because they were replicating 1979 constitution. Lawyers will tell you if something has not been mentioned in the constitution, it's a residual matter, and that is for the jurisdiction of the states. That is why Rivers State went to court. It was easy to win. Lagos State went, they won. They enacted their VAT law, both Lagos and Rivers State. I read both VAT law and I panicked because the level of danger ahead is scary. Those laws were worse than the original version of our 1993 decree, taking us back to the colonial eras. Threshold, there was no threshold. Just go and meet vulcanizer and say, okay, you never file VAT. Your tailor is in trouble, even your barber. Take the machine away. Rate of tax, input, output, everything convoluted. And these are like the two most resource states in Nigeria are already getting it wrong. But why is that? Because these states believe that they are making so much contribution into VAT pool and getting little back, which is partly correct and partly incorrect. It is correct to the extent that economic activities in Lagos is expected to be more than anywhere else in Nigeria. But what should it be? We don't know. We have an idea of what it should be. But what is it? The data shows that Lagos State alone gives almost more than half of VAT revenue in Nigeria. But that's because VAT derivation is attributed to states based on where the taxpayer is making the payment of the VAT. When I was a middle-level associate, we used to do VAT based on branches. So banks, the likes of Nigerian bureaus will do like, a bank will file more than 300 returns. Everywhere you have a branch, you find the next office and do your VAT there. It was a nightmare. When we moved to central filing, say file only one return. Usually you do that at your head office because that's where your finance department is. We lost the data that we were collecting about where those activities were taking place. So we solved one problem and created a new one. But that new one is not the business of the business community. So they never complained about it. What's your business with how they calculate derivation? So the derivation that is attributed to Lagos, to Rivers, to FCT are inflated. Because when MTN pays VAT in Lagos, They're paying VAT on the calls that are being made across Nigeria, from Kano to Ekiti to Oyo to Zamfara states. Why should all that credit go to Lagos State? When Coca-Cola sends products to their distributors, they pay VAT in Lagos. Dangote will send cement all over Nigeria with BUA as well. They pay all the VAT in Lagos. So our view is that that derivation is distorted and it should be corrected. What should we do going forward? Let's trace the VAT to the place of consumption and give the credit to that state where the item has been consumed. And because of that correction, we should then allow a state to keep 60% of the VAT derived within their jurisdiction. Today, the amount of VAT that is to the credit of state and local government is shared as follows: 20% derivation, 50% equality, and 30% based on population. We're saying going forward, derivation should be 60%, population should be 20%, equality should be 20%. To be honest, we're very proud of ourselves when we came up with this idea. We thought we would be commended by all the states, apart from Lagos State and maybe River State. So in our view, the tough conversation will be with Lagos State. And so we did. We went to the Governors Forum. You know, our leaders they're always very busy. When they had time for us, they gave us, I think it was 15 minutes. And we stretched it to 25. What can you say with these reforms in 15 minutes? So when somebody picked it up and said, this is against the North, and they amplified it to become what it is now, it was a complete misunderstanding of what we're trying. We have the data. So the states that are suffering from what we're saying now, it's almost all the states, apart from those three I told you: Lagos, FCT, River State, and interestingly, the fourth one is Oyo. Those are the four states that may just like what we are doing now. Every other state is being under-recognized for their contribution. We think it's the right thing to do. Lagos State, of course, they may not like it, but they are supportive. And that's something that I really appreciate. Even this morning, as we're about to start, I saw that the governor was trying to reach out to me. So I went out to call him. In my mind, I say, I hope that Mr. Governor will not say, by the way, we are no longer interested. My heart was a God. Let him not say that. And guess what? He was still supportive and said, would you come and talk to us at Governors Forum? That's why I'm going to run away once I'm done here. There's Governors Forum this evening, where I'm trying to also get another opportunity to talk to them, because I believe that if they understand what we are trying to do, they will support us. And even if they don't support us, let it be that they understand what we're trying to do and they say, we understand it, but we still don't want. That's really our objective. We think that we owe it a duty to explain. Just keep explaining. But we remain positive. We know that our governors love our people. So, I already explained this. Then, this is the one that most people missed. So in the new law that we propose, there's a section 2212 of the Nigerian Tax Administration Bill that says, for the purpose of attribution, any return under this section shall provide details of derivation of taxable supplies by location in a manner prescribed by the service. So when you are submitting your returns as a company, if you have distributors, you tell us your VAT is this amount, and for this month, I send product to XYZ distributors in Ekiti, in Ondo, in Yobe. These are information that you already have in your system. We're not asking you to do anything extraordinary. Just give us that data so that FRS can pick your VAT and attribute it to the states. But if you think there will be any complications, that's why we've called the CFOs. Let us know so we can work out the language and the details. So this is just a scenario analysis to say, if MTN, by the way, MTN is by far the largest contributor to VAT revenue in Nigeria. The gap between them and second is like heaven and earth apart. So the second largest payer of VAT is Dangote. The third is Airtel. Okay, so we have the top 20. The top 20 alone are contributing like 90%. So we thought that if you analyze the top 20, you are good. So, assuming MTN had remitted VAT of 120 billion, under the current model, the whole of this 120 billion is attributed to Lagos State. Of course, I don't want to put 36 states because it will be difficult to read. So we just put one state per geopolitical zone. So just for the sake of our analysis. This 120 is allocated to Lagos entirely. Nothing is allocated to the other states. So we then share the revenue. 20% is based on derivation. Since these guys don't have derivation, they don't get anything. Lagos State gets 24 of the 120, right? And Lagos says, but this is 120 I've contributed. Why am I getting only 24? They want to go and pass a law to do VAT alone. But this 120 is actually not their 120 alone, right? Then there is 50% of the 120, which is 60, is shared equally. That's why everybody gets 10. And then the balance is shared based on population. These are the official population of the states based on the last census. That's what they get. So together, in total, this is the VAT they will share for the month. What are we proposing? Take the 120 billion that MTN remitted, and these are the assumption of how much calls are made from those states. Again, these assumptions may be wrong because we haven't even asked MTN. We just use some guesstimates also based on GDP size of those states. It won't be very far from the actual numbers. So that means the 120 is attributed as follows. And therefore, you share 60% based on derivation. This is what you get. You share 20% on equality. Everybody gets the same thing. Share based on population, you get this. And this is now the total. Look at it. States, the revenue share of VAT to Lagos State has come down. And the VAT for the other states have increased. So why should anybody be in these other states and be fighting this reform? It must be they do not understand it. Or there's something else they are fighting they're not telling us. It's either of the two or both. Next is personal income tax. I know many people in the room are interested in this one. What are we doing to personal income tax? Currently, our personal income tax regime was introduced in 2011, 13 years ago. 13 years ago, once you start earning about 500,000 per month, you start paying the top bracket because you are not the poorest person in Nigeria. Today, you earn 400, 500K. The Lord is your strength. Survival is hard. When you drag if you do nothing to your tax bracket and rate, and there's inflation, we call it fiscal drag. Because you drag the poorest people, you drag them up. They begin to pay marginal rate that is similar to high net worth individual. That's the height of inequality and wickedness. We needed to correct that. Because somebody was asking, if it's not broken, why are you fixing it? I said, but it's broken. That's the number one thing. The second thing is that small businesses are not really recognized like people in employment. So if somebody cannot find a job, they start doing their small businesses. They don't get most of the reliefs and exemptions that employed people get, and their threshold is too small. Then there's a wide gap between various tax regimes. If I set up a business today and it's called Taiwo Enterprises to produce bottled water, and I'm a honest Nigerian who tries to pay all my taxes, the maximum income tax I will pay, even if I make 100 million naira a month, is 19%. A little less than 19, but let's work with 19. Should I go and make the mistake of setting up Taiwo Nigeria Limited with CAC? That my tax immediately goes up from 19 to over 40%. I haven't done anything wrong. It's still the same business, but I've tried to formalize, and then I get punished. And then we turn around and say, informal sector is too big. People are not, they're supposed to formalize. They're not dumb people. They can do the maths. So we're saying, if you really want people to formalize, you must make sure that the tax burden is not too significantly different. It was a major reason for bringing capital gains tax into income tax. It was a major reason for reducing company income tax from 30 to 25. It was a major reason for increasing the marginal rate for personal income tax to 25. I know many people don't like that 25, especially the rich people in the room. Before you get to 25% personal income tax rate in Nigeria, we have a model actually. So I've asked my team to see how we can put the model on the website. So when you go there, just put your salary there per month to tell you what you are paying now and what you pay under the model. The model shows that if you earn about 1.7 million naira a month or less, your personal income tax rate will come down. Yes, it will reduce. If you earn 1.7 million per month or less. I still know that people in the room are still not very happy because that's not the kind of money they earn. Say, who is talking about 1.7? If this was on Twitter now, I would get a lot of applause. If you earn about 100,000 or less, you're likely to find your PIT becomes 0. So the first 800,000 is 0%. But remember, there is this gift of 200,000 on rent. So if you pay rent of up to 200,000, add it to 800, you have 1 million naira a year that is tax free completely. So this takes out. Poverty is in the land. This threshold, if you also report to your landlord, this threshold I just told you about is actually more than 1/3 of all workers in Nigeria, public and private combined. Life is hard. 1.7 million to around 190,000, you pay less. Above 1.7, you begin to pay incrementally more. If you earn like 2 million naira a month, you may see that your PAYE goes up by like 5K a month. So the amount is not even noticeable. See people earning 2 million, they don't want to pay 5K more in a month. We know life is hard for everybody, honestly. So, but we just need to, this reform goes beyond. That's why we're trying to set the context. So you know what's driving our reform. Before you get to 25%, you must be earning close to 20 million naira a month. Yes, but not many people are earning it. That's the point. The percentage of workers in Nigeria who earn 1.7 million naira or more in a month is less than 10%. Yeah, it's actually less than 10%. In fact, it's less than 5%. Things are hard. You don't know it. I know that, I'll be in that class of any more than 1.7 million, right? I know even for me, it's hard. Band A bill alone in a month. It was my annual salary when I started working in a month. And those of us who are working and earning those kind of 1.7, you have a whole community that you cater for. The bills, the black taxes you pay. There's also the implicit tax because government is not playing their role. We know. But we say if you take a medium to long-term view and all this reform work, you find things become easier as we go along. And that's when we know, because if you use the lenses of today to reform for tomorrow, there'll be a disconnect. So those little sacrifices are the one we are pleading to you to please understand where we're coming from. But really, if you earn like 20 million a month, should we be begging you? So someone says, why did you take personal allowance rate away? I'll put the question to you this way. You have a job offer. Job offer A says, okay, I'll pay you 5 million naira a month. No breakdown, no story. Are you good or you are not good? You say, okay, wait, I have another offer. This offer says, I give you 4.5 million a month. 1 million is for transport, 2 million is for accommodation, there's entertainment, there is inconvenience, hardship allowance, 4.5. Which one would you take? Who is interested in the breakdown? I'm interested in the 5 million. So the personal allowance, personal relief, consolidated relief allowance is a waste of time, unnecessary complication. We want to get to a regime where someone who does not have more than primary education can file their returns without having to find, because they can't even pay a consultant. Filing compliance in Nigeria is less than 2%. We don't file returns. So we thought a way of simplifying it is take away all those personal relief allowances, consolidated relief allowances, just make it easy. What's your income? First 800,000, first this and that, next that and that. That's why we took it away. But it does not mean that we have increased the burden. So I've seen some tax consultants say that and I've been disappointed, really, because it's not the relief and allowances that matters to me. It is the effective tax rate that I pay. So we challenge anyone to put the table we propose into a model. Compare with your current model and see whether we are wrong or not. Challenge us. Just send us a note if we are wrong. The highest rate now is 25. Yes. Yeah, so that's why I'm being open with you. There's a slight increase. Exactly. And that's for the rich people. And I just told you, I attended an event. I attended an event for economists in the FCT. And someone said, so no, there's no middle class again. I said, sir, let's agree that there's no middle class. In this room, you flew plane to come to Abuja. Some of you are staying in 5-star hotels, right? So, and I know you are not the poorest people in Nigeria. So you must be the elites, or you agree with me that you are the middle class. So it is not right statistically to say there's no middle class in Nigeria. There is middle class. Middle class is not established globally based on income level. It's established based on what you can afford with the income that you earn. If you earn $1,000 per month in Nigeria today, your $1,000 in Nigeria is worth more than $4,000 in the US. I'm saying that the person that is earning $1,000 in Nigeria today, we have savings. The person that is earning $4,000 in the US will be in debt. So that's why it's situational. It's based on circumstances. I'm not hoping that I'll be able to convince you, but I'm hoping that I'll be able to explain to you the logic behind our recommendation. Okay, so the other points are there. I've been reminded that I've overspent time. So the other contentious issues are development levy. I've explained that. We're not proposing scrapping of TET fund or NASENI or NIDA. No, we have no such powers. It's not within our mandate. Excise services on excise on tax, excise tax on services I've explained. Small businesses I've explained. Harmonization of agencies. We're not merging agencies into FRS. We think that will be a gradual process if it becomes necessary. But we want to integrate how they administer revenues, so that when you import something, you don't under-declare and then over-declare to FRS. And there are some agencies that should not be collecting taxes. We think they should stop collecting taxes and focus on regulation, which was the reason they were set up. I've explained the free zone to you already. So the other bills will be fast. So this bill that we just discussed now, is more than the other three combined. Okay. So the others are really just administrative, so it'll be quick. So the tax admin bill is trying to harmonize our identity. So we'll be using NIN for individuals, company registration number for companies, and then we'll find something for corporations. That will be the primary ID. So anything else you have is resting on that. So that is the data we use to connect the intelligence within the ecosystem. So if you do something on your phone, the system picks it, right? You go and buy things in the mall with your payment card, it picks it. You put money in the bank account, it picks it. You open an asset management account, picks it. Stock markets, picks it. You travel abroad, picks. You register a new car, picks. You build a new house, you have to connect. You ask for electricity. When you ask for electricity for connection, it picks it. You show up at the end of the year, say life is hard in Nigeria. Total income is 2 million. Say, okay, our record shows that going to malls alone, you spend 6 million. Can you help us reconcile your data? So we want people to be honest so that this system can work. All the countries that we want to be like, this is how they make their system work. All of us have to be willing to make these little sacrifices. What else should I highlight here? Of course, we're going to be using a lot of technology. So you see that there. Everybody must submit annual returns. It will be simple. And we've given powers to the Revenue Authority to even simplify it for low-income earners. So something that you can do like, so there's even possibility that the only thing you have to tell me in your returns as a small business is your turnover. Then we can do standard deductions. So we look at every sector. We had about 180 small sectors within informal sector. So we can do the analysis to say profitability in makeup, in tailoring. We can do all of that. How much do they normally spend on their assets? We'll create standard deduction for you. So once you tell us how much you earn, the system will generate your expenses for you. If you don't like it, then you give us data and put your actual expenses, right? So, but that's data to use for economic planning. So that the next time we are looking for poor people to help, we don't go to villages with money in Ghana must go. You go to the database and you can tell who is poor and who is not. Most likely if somebody loads credits of 100 naira a month and they flash all through the month, chances are that they have they don't call people, they flash you. When you get angry, you call them back to abuse them. They use the opportunity to quickly say what they have to say. Those are guys who need help. So if you dispute an assessment, the government says your assessment is 4 billion. You are writing English back and forth. But you know there's 500 million that is due. This law says you must pay it without any demand. So pay what you agree to while you are disputing the rest. Then we have exchange of information, accreditation of tax agents. Going forward, this is not a popular one because I'm speaking to tax consultants. You cannot just go back and be filing returns for people and be representing them. We need to be sure that, number one, you are technically competent, and number two, you are ethical. Those two conditions. And we'll track it on the system. So the plan is that an account will be created for you if you're a tax agent. Every time you submit a return for a client, it's linked to your own account. The day you go and tell them that there's no VAT on airtime because airtime is an essential consumption or something ridiculous like that, we'll know that whatever you have done wrong is being replicated across your client. So we can know the number of taxpayers we need to remediate, and you must come and explain to us why you did not know the withholding tax rate or VAT rate. In addition to that, it would then be that if we are unable to explain sufficiently your lack of technical knowledge, or you have been unethical, asking people to under-declare income here and there, you can be de-accredited and you will never be able to represent taxpayers anymore. In addition to doing the right thing, you must do the right thing for yourself. So we'll also be tracking how compliant you are on your own tax affairs. Because he who comes to equity should come with clean hands. So some people are not happy with us. They say we want to be controlling them. We looked at a number of countries. We love what they do in South Africa. South Africa not only regulates tax consultants, they regulate their regulating bodies. So like your ICANN item, before your members are eligible, you must do certain things. So nobody earns a free ticket to any meal. You must earn it. Cannot be given to you for free. Some of the biggest problem we have with the tax system today is facilitated by tax consultants. Either doing the wrong thing or looking the other way. Then there's also the supremacy of this one for administration. Anything to do with administration must be consistent with this bill, otherwise it will not work. Revenue service establishments. I explained this one earlier on, so I think I'll just move on. Right? Nothing sticks out there. There's a requirement for the Accountant General for the Federation to deduct, because we want government to be tax compliant. You know, government is not tax compliant in Nigeria. States will deduct as they will not remit. Federal government has staff all over Nigeria. They don't pay the PAYE on time. Sometimes for a whole year, they have not paid. So if government is not doing the right thing, why should the rest of us do the right thing? So we're now saying if any government fails to do the right thing, we just find out how much they are owing with the evidence. And that money is taken from their FAC allocation. So next time they will know they have to behave well. Of course, you can't take a government to court, right? You can't put somebody in jail because but there could be consequences that will help them to behave well. It depends on what the person that needs the tax is demanding. So it's up to them. They can decide they just want the principal or they want to be penalty and interest as contained in the law. Joint Revenue Establishment Board. So it has this 7 parts and schedules. The work of the ombuds is quite interesting. I will encourage that you read through that. So the Joint Task Board will be the one maintaining our tax identification centrally for the whole country. And complementary proposals as I round off. We have a new national fiscal policy that we are proposing for Nigeria to replace the national tax policy. You see the attention there is broader than tax, so it's fiscal. So we are helping ourselves about how we manage our taxes, how we spend our money, how we borrow, and other important things like the environment, sustainable development goals, and what is even our national policy on subsidy and conditional cash transfer. Do we just wake up one day and say, a lot of poor people cannot eat, put money and go and share 5,000 or send them rice? What should we subsidize? Should we subsidize anything? If we should, what should we subsidize? Consumption, production, agric, technology, telecoms, right? So we've developed a framework for subsidy and cash transfers for Nigeria in that policy, which we believe will help us as a country to have some organization as to how we do things. What we found out is that people feel more dignified if you make them work and pay them than if you just share money. So for example, I can say set up a cooperative or association and say, we award to you the cleaning of this road for the next 6 months. So they just come, men, women, they clean the road and they get paid 20K. They feel dignified than having to go and lobby one politician so they can be on the list of 20K. Then before you sign the list, they say, but this 20K will only give you 4 if you sign. Of course, you know, if you don't sign, you don't get anything. You now sign 16, does not come to you. But they put 15 in or 20 in, so we can do those things better. So how do you protect the poor? How do you use evidence for policy formulation? etc. We have the economic stabilization bills, which are trying to address short-term issues. Like, for example, the taxes, levies, and fees that Nigerian companies are asked to pay in foreign currencies, about $3.5 to $4 billion a year. And that puts pressure on the Naira without adding to the FS liquidity in Nigeria. So we identified all the laws and we are amending them to say, pay your taxes and levies and fees in Naira. So some of the details are here, which we can have a look at later if you are interested. We sent 10 amendment bills to the National Assembly for the Constitution to be amended, including issues of how you deal with VAT, how we do with our budgets, how we implement treaties that we get into, requirement for elections. Of course, you can guess what the content is. You can't see everything, otherwise your reform will never pass. So presidential pardon, ministers of the federation, for example, today our constitution says that every state must have at least one minister. So people now complain that we have 48 ministers. Personally, I think that the problem is not the number of ministers, but I do understand that it does not send the right signal in terms of cost of governance. So our proposal says, instead of one minister per state, why don't we say you must have an equal number of ministers per each geopolitical zone, provided that no state has more than one minister? That's the complete opposite of what we have now, right? Which means one president might just decide to have 7 ministers, one per each geopolitical zone and FCC, and they're fine. Or you can have 2 ministers per geopolitical zone plus FCC, then you have 13. You can have 19. You can have 25. You can have 37. You cannot have more than 37. Because our minimum now becomes our maximum. So we have those kind of ideas that we've sent to the National Assembly. Our ideas on the budget is transformative. We are so hopeful that those things can fly. It will change how we do budget, how we monitor how we spend our monies, and the benchmarks of what should be overhead, personnel costs, human capital development. infrastructure, not just capital. You know, today you can build new homes for lawmakers, for presidents, for VP, buy bulletproof cars. All of it is capital. But that's capital for private business, for a country. That's not capital that we're looking for. We're looking for infrastructure. You building roads, electricity, ports, providing water, and all of that. And then for local governments, we know they have their autonomy for financial autonomy now. We looked at the constitution under fourth schedule, and they are supposed to be doing a lot of amazing stuff, including local government should provide homes for the homeless, not to go and be abusing them. See, it says homes for destitute. What do we do in Nigeria today? We see them as irritations. The way we behave in Nigeria, I don't know whether it's from a different planet. You go to the most vulnerable people. I say, what are they doing there? They make the city dirty. Let's get rid of them. Who does that? The constitution envisages that you provide homes for them. And that's local government, actually. The streets, the roads, gardens, parks, lighting, drains, right? Public convenience, sewage, refuse disposal, all of this. And then in conjunction with the states, take care of primary adult education, agric development, health services. But many of the local governments are not even aware what they're supposed to be doing. You look online today, you will not find the budget of one local government online. Then it's too much expectation to expect financial statement that is audited. So why can't we? By the way, this constitution stuff, we are proposing that all these of collecting licenses and rates from radios, TV, trucks, wheelbarrow, right? We've gone past that. When I was a kid growing up in the village, my village, we only had 2 TVs. 2 families had 2 TVs. They were black and white. Those days when they had a whole cupboard for the TV and then they lock it, right? At 4 o'clock, it will start with those lines from NTA. So when you watch those plays, it's black and white. So those of us that were kids, you couldn't sit inside because that's for the adults and the elderly. On the window, you line up, you carry the other person, you put stool. That's how we watch those things. If you had a TV, you were a rich person. We could ask you to pay a tax. That was in the 1960s and 70s. In 2024, that is not the sign of wealth. Same thing that a bicycle is not the sign of wealth. So we have to go to the constitution and review it and stop taxing poverty. Then whatever is left there, let the local government develop a plan. For example, in my local government, we have 2,400 kilometers of road, for example. 2,100 is not paved. 300 is paved or requiring repairs. We have 18,000 households. 14,000 of them do have access to water, right? Sanitation. This number of households have no sanitation. Let's collect the data first. Don't go and build 1-2 kilometers here and say this is dividend of democracy. You've done 2 kilometers and there's supposed to be 2,000. If we are doing 2 every year, when are we going to finish 2,000? We can't finish it in our lifetime. That's what it means. So we're saying do development plan. Use that plan to do your annual budget. Use your annual budget to do your annual financial statement that is audited, including the auditor's report, and put it on a national portal. So you go to that national portal, you can find your local government and all the data. We saw something in South Africa that was quite interesting. In South Africa, there's a law that requires the local government to report how much of their budget they have spent on what they call wasteful and unproductive spending as a percentage of total spending. I thought that was really innovative. And I said, maybe we can take it to a different level. How about we put it in our laws that says you report the amount of wasteful and unproductive spending, but if you under-report it, any amount under-reported becomes the personal liability of the chairman of the local government to be recovered from him personally, so that either while you're in office or after, we can declare you bankrupt. Take everything you have stolen from you. So this time around, you be careful to report it correctly, right? But by reporting it correctly, there's a public pressure on you to say, why are you spending so much on wasteful and unproductive spending? Honestly, if you want to fix our problem, we can fix them if we agree on these sort of things. Finally, remember, there is a social contract, but there's even something that is bigger. We call it the socio-economic contract. And we develop an equation that says taxes are not standalones, right? Taxes are the consequences of economic activities. They produce taxes. When you finish collecting the taxes, tax is a means to an end, not an end in itself. You collect taxes so that you can improve the lives, livelihood, and the well-being of the people. That completes the equation, right? Any policies, including tax, that distorts the economic activities is a bad policy. Or any policy that undermines the well-being of the people is a bad policy. So ensure that your policies do not distort economic activities, do not undermine the well-being of the people, and you are good to go. Based on that social economic contract, you must think about shared prosperity, where the economy is conducive and investment friendly. Your policies are purposeful and coherent. Your laws are enabling and dynamic, and governance is simple and efficient. Everything working together for the people to deliver shared prosperity. So that is it in a nutshell. These are some of the aspirations. I won't go through them. What do we want from you? Thank you for being here. For those that are physically in the room and those that are online. Those that are online, we apologize for not inviting them to be here physically. The invitation to be here physically, we couldn't send to everyone. So we sent to a few people because the room is small. And if we get a larger room, it becomes difficult to be effective. But we appreciate everyone, whether they joined us physically or not. So please engage further with us and get involved. This is not the reform of the committee. It's not the reform of Mr. President. It is our reforms. We're doing this together. Those of us who are doing this job are representing you. So please take interest in not just the tax reform bills. Take interest in everything else. You can help us by taking interest in the whole reforms and carefully reading the changes. Don't jump into any conclusion. Please read. Consider all the proposed reforms holistically. Don't just say VAT is going up to 10%. When you put that on social media, they don't hear anything else. Remember, VAT is coming down on 4 out of 5. When you want to tell anybody VAT is going up, say on 1, and that is going down on 4. Participate in the reform process and give constructive feedback. When you don't like what we're doing, give us alternatives. It's just not enough to say, I don't like it. Tell us what else we should do. Do not spread misinformation. You are not entitled to your opinion. You are only entitled to your informed opinion. And if there's any group where this is true, it is the group here, the CFOs and the tax. You can't just give an opinion. Give informed opinion so you do not mislead our people. You can follow us. We have a dedicated website. It's updated almost every day. So you see good content there. We have a resource center there. This is the QR code for the resource center. We have an email. Should you want to send us an email, you can send us a message on WhatsApp. Don't call, please. Just messages. Because the person handling it may not have the means to answer your question, but they have the means to direct your requests. LinkedIn, if you're up for social media, X, LinkedIn, Instagram, Facebook, we have a YouTube account, and you can please engage with us, and we look forward to those engagements. I close with this quote by Nelson Mandela, and it's a message to all of us. We have hopes, we have dreams for our country, we have aspirations, but we also have our concerns, or call them fears, of things that can go wrong, right? But how should we move forward? Mandela advises that the choices we make should reflect our hope, not our affairs. On that note, thank you very much for your attention.
Big round of applause for Taiwo. You really spent time in looking at those bills. And I know we haven't looked at everything. So we have some time left for questions, guys. See my guys at the back. So we're going to take questions from the room, and then we'll look at some questions online. Nikki already. All right. I don't know if there's a roaming mic, so do you want to... Yeah, we can take the questions together. So just give her.
So good afternoon, everyone, and a special thank you to Taiwo. Special thank you to Taiwo. I'm happy I attended this session. I definitely got clarifications on a number of things, and I need to say a big thank you to your committee. A lot of work has been done. The thinking is very robust, it's very Nigeria-centric, and we'll see how we'll all support you as much as possible, so thank you. A lot of the reforms, I think they are very much in the right direction. Just a little maybe tweaks here and there, but I just want to talk about one major one. And you also mentioned when you are saying that some of the controversial one, which is the global minimum tax that we're implementing. The thinking behind it is understandable, because for multinationals to avoid profit shifting, let's set up that global minimum tax. But for the OECD also, you know, they put a threshold for companies that have made globally 850 million euros. If you convert that to Naira, you'll be in excess of 1 trillion Naira. So using our own base of 20 billion actually puts many companies in that bracket. And 15% of PBT is actually huge. So what I would like to crave the indulgence is, let's reconsider. Rather than a 20 billion as the threshold, it can be lifted. Unfortunately, I don't have statistics to show what I think is right, but I think it shouldn't be less than 100 billion if we're going to do it. I know we can't match the figure that OECD is using. So that's the first one. The second one is that even as the OECD is implementing this, they recognize that for certain kind of industries, they have specific issues, and it cannot be implemented blank, like a kind of blanket cover like that here. So they're also putting in place, you know, advisory, explanatory notes, and things that can be done in clear cases like insurance. You know, and they encourage companies to have specific guidelines, because they understand that the tax base is different from, the tax base is different from the accounting standard. And they have those things in place just to ensure that you don't end up double taxing. I think we need that in Nigeria also. And I'll give the reason clearly for that. Currently, for most companies we have in Nigeria, when you do your tax computation, you start from PBT actually, and you then do the adjustment, you add back, and you deduct the ones that are not taxable. Insurance is probably the only industry you don't start from PBT, especially the life insurance. You identify the taxable income, which is investment income, because the life premium they collect is not theirs. It's for policyholders, they're still going to return it. So you must start from their own investment income and fees, make adjustments to it, and get an adjusted profit that is then used. So using 15% of PBT on such kind of industries obviously disadvantages them. And our proposition is that we should start from their own income that is taxable, the investment income, deduct management expenses, and that adjusted profits should be what 15% is then considered upon. Let me pause here. I know a lot of people have other things. Thank you.
Thank you so much.
And thank you. Great work.
So we have a question here.
Okay, that's fine. Thank you.
Let's take all the questions together, and then Taiwo can respond.
Okay, that's fine. Yeah, my name is Olawale Aziz. I'm the CFO of Checks and Balances. So I have a question on the company income tax, right? Typically, you recognize your revenue when you earn it. But you find out that when the tax people comes, even the impairment that you have booked on those provisions for your receivable, they are added back. So what I'm saying in that is that even at the end of the year, when I'm filing my return, if I have not collected that receivable, I should go and borrow to pay it. So I just want to know what is going to be done to address that.
Thank you, Olawale. So this table.
All right, thank you, Taiwo. You've done a very good job. I have a question. I'm Peter Warfare. You obviously agree that we need to always touch our laws, but I was expecting something. Maybe you didn't say that specifically. What do you see, or what do you expect to see in the medium and long term that will tell you that these reforms are effective? I mean, I didn't see that in terms of numbers and, in quantitative terms. Thank you.
Thank you, Mr. Taiwo, for the session. I think very quick question. What do you answer? Okay. Thank you for the session. I had a lot of structure. I work with VAT. My questions are quick. Is there a particular timeline for the VAT implementation and for the other reforms in terms of structure? What timelines are you looking at?
I just want to be sure I'm not excluding those at the back.
Okay, thanks a lot, Taiwo. Oladejo here from Anderson. Like someone said, a lot of thoughts have definitely gone into this, and it's quite reflective. My question is just to be certain of what measures are going to be put in place to ring-fence all of these reforms, because it is quite comprehensive. It's going to completely change the tax landscape, that we have in Nigeria. What reforms, what measures are being put in place to ensure that those reforms are ring-fenced and we are not jumping from pillar to post as a country? The second question is with respect to removal of CRA. The explanation you provided with respect to your basis of the removal wasn't specific. It was more like, why do you need the breakdown? Why not the breakdown, really? Why are we choosing not to focus on the breakdown? Because the relief seemed to be robust enough, that it kind of caters for a huge chunk. But what you've said is that if you run a model and you put what you are going to be having vis-a-vis what we used to have, you would see that not a lot has changed. The question is, why did it actually go? And on the final note, the concept of the ombudsman, I'm not sure you or the bill actually mentions who is going to be. Of course, it's expected that because it is central, and they are supposed to reflect the interest of the taxpayer or the general populace, right? But someone is going to be responsible for their pay.
Okay, sir. The question?
The question is, how are you going to be sure that the interest of the populace that they're supposed to protect is safeguarded?
Okay.
Because he who plays the piper really dictates the tune.
All right, thank you. All right, so I'll just go quickly here, and then there, and then we come back here, and here. So 4 more.
Thank you very much, Taiwo, for this elaborate session. I work in the alcohol beverage industry, and we have a bit of concern around excise. I'm wondering if there is any opportunities to sort of simplify how we administer, especially the ad valorem on spirits, because that has created a bit of complexity, especially around determining the UAC. So I'm wondering, is it within scope of what you're looking at in the spirit of simplification? Then secondly is on you made mention around the software that would interface with businesses. My concern is around cybersecurity, because in recent times, a lot of the attacks companies have had are from remote softwares that interface with their businesses. So how do we intend to safeguard it, especially because it's from the government? And I'm not saying that security experts, they are not on top of their game, but we tend to have those kind of exposures. So those are the 2 questions I have. Thank you.
Thank you.
Thank you, Mr. Taiwo, for the presentation.
So my concern is on the fiscalization aspect of this reform, which is very exciting. I am from the QRS space, and the fiscalization is not new to the QRS space, in that FRS has attempted to fiscalize in this space. However, my experience is most of the software they use, the integration with the company software were very inadequate, and it was a big issue. Even up to now, this system has not been completed, and there were a sourcing of this fiscalization. So my concern now is, how are you going to integrate this? Is it going to come through consultants and the rest, and even the issue of cyber security and the rest? Thank you.
Thank you. All right, so the one question there and one question here. And then Taiwo, you can.
All right, Kenneth Erikume from PwC. Just a few additional questions. I would want to congratulate the committee as well. Brilliant work done. 3 questions. The first one is on dealing with the issue of the global minimum tax. I think there are 2 conditions. The first one is the multinational enterprise. And we also have some Nigerian headquartered companies that are multinationals, and by that definition, their subsidiaries could be caught. Nigerian subsidiaries could be caught by that 15%. So tweaks again. Then the issue of taxing the fruit, not the seed. There are some industries that are expecting a bit more in terms of the reforms. I think you mentioned the gaming industry as an example. Now there's an excise, but they pay something to National Lotteries Regulatory Commission, to the state. Looking at the principles for the reforms, harmonization is key, and ensuring that, I know there were some safeguards which you mentioned, but those safeguards requires them to actually enforce their rights, which could be complicated. And then the final one is, hopefully there's stabilization in terms of the economy. But some of those absolute numbers, when we're talking about thresholds and things, how would they be dealt with going forward? Thank you.
Thank you, Taiwo, for such a wonderful presentation. My name is Emeka Chime from PwC. Maybe not to overflog the minimum tax question, but I'll just add on to it. Like you presented, companies that are solely focused on exports, enjoy the exemption, especially where they're set up in an export processing zone and free trade zone. So just to understand the intersection of this minimum tax, and that, because there was no clarity on whether they will also fall under that tax. And also something that wasn't really touched on today, because there are many non-resident companies, especially the ones that create significant economic presence, right? So all the digital companies, and maybe the others that don't provide digital services, but also have a significant economic presence because they provide other services. And their obligation under Nigerian tax laws, for example, to withhold. So just to summarize, those kinds of companies, are they required to withhold taxes when they pay taxable persons in Nigeria? Because under the previous law, there was a condition around you have to be operating the payee scheme to withhold taxes. That has been taken out. So these guys don't operate the payee scheme, but they are outside Nigeria. And many of them are wondering whether they should withhold, especially, like I said, the ones that have no nexus with Nigeria other than the fact that they have an economic presence as defined. Thanks.
Good afternoon, everybody. My name is Jamil. Thank you very much, Mr. Taiwo. Mine is just a little clarification. This is on interest paid disallowance, disallowing interest paid on related party loans. So if it's from a non-related party to be allowed, but if it's related party, my clarification is it going to be the excess
interest rate on the market interest rate or MPR? Or is it going to be a total disallowance of any interest paid on related loans? Thank you.
Sorry.
Oh, okay. You already have the mic. Okay. Let her
so we
just.
take that. We take it today.
Okay. Good afternoon. Thank you very much, Taiwo. My name is Funke. I'm from Nigerian Bottling Company. I have one question, and it's with respect to the Finance Act and all the policy, the fiscal policy measures that we usually get from the Ministry of Finance. Now, what happens with the, if this bill is passed, should we still expect all this annual Finance Act, that we get? And also the existing ones, are they already incorporated into this new bill, and those will be repealed as well? That's my question. Thank you.
All right. I'll go first. Thank you. Mine is just around two things very quickly. I didn't see a lot of conversation around transfer pricing, and there seemed to be a lot of confusion in that aspect. So, for example, some of these requirements for approval for recharges, cost recharges, and the rest. Are we looking at all of those NOTAP versus FRS versus CBN, not approving management? Do we also APA? APA in its current state is still very, very confusing. Are you guys also looking at all of that? Then the development levy, to my mind, consolidating the development levy takes care of the multiple. However, the 4% is still around where all of those, by the time you add education tax, add all of that, shouldn't we be looking at a way to say the portion of the pie that they get should actually reduce? Because I think invariably they've increased ETR by all of those things. So adding this 4 now, already before, I know we're looking at 25%, at what point? So, and at what point does the development levy terminate? You say it will reduce after a while, just so that we get a bit of clarity. And then the third one for me is just around, what's the reception? I'm looking at our legislatures and saying, you're talking to them. So are they, I'm just wondering, will they repeal all the existing laws? Are they receptive? How easy will it be to just come up with this consolidated one? What's your feel? Do you think it's something that would happen, or it's just another long process of getting there? Thank you.
All right, thank you. I think my question is very similar to his, but just to be a bit more specific. Since we're talking about simplification of taxes and regulation and all of that, there was no mention particularly about CAFA. That is a bane of contention. So are we still going to be required to get CAFA for assets to be able to take deductions, or is that going to be gone? Thank you.
All right, thank you very much for those excellent questions, and I'm not surprised. If you have very knowledgeable people in the room, they will ask questions. So the first one is around the global minimum tax and the threshold. So thanks, Nike, for asking that question. So we had a lot of debates back and forth. We landed on the 20 billion on the basis that we see a lot of behavior in Nigeria from taxpayers, such that some sectors that are really big, they pay effective tax rate that is single digits, including not even the sectors you mentioned. Even me, I was surprised with the kind of sectors that have reached out to say, this is your 15%, we don't like it. And I say, you don't like it, Ke? Say, yeah, because now we pay effective of less than 10%. I say, but you shouldn't be paying effective less than 10%. You shouldn't be paying that. So you now find one medium-sized company is paying 30%. You are big, you are paying 8%. It's not fair. But they find the way to get the waivers, the exemption, the credit, the deductions. It's not helping us. So we think that 15% is almost like a counterbalancing measure to say you can stretch all your ability, your access to the powers that be, but when you are done, please give us 15%. And it's 15% of your profit. So we're not taxing your capital. We're not giving you any burdens that you haven't reported. This is your profit, give us 15%. But I get your point about the peculiarities of insurance. I would say, as a group, you should please send to us we don't want to do the 15% on a profit that is not your profit. So tell us how to arrive at your profit, but we do think that that 15% is fair. If the rate is 25, do gymnastic and reduce it to 15, but not beyond. Not below 15, please. Then the other one is for CIT, what's the treatment of impairment and receivables? Again, another interesting debate we had in our committee. We had receivables, impairment, and inventory. We wanted a very simple one of why you doubting me as a business person? I'm doing my business. You can't say I'm fraudulent, I'm lying, I don't want to pay tax. And I said, why would I write off 100 naira so that I can save 30 naira deduction? It doesn't make sense. If I'm writing off a debt, it's because it's bad. The only exception you should make is if it's related parties. So I can say to myself and make it bad, right? So we've improved. It's not 100%, but what you find in the bills is impairment, receivables, and inventory. We've improved the conditions for claiming deductions to make it more friendly. Medium to long-term KPIs for these are reforms. How do we know that we have succeeded? So we have them. I can spend a whole day just telling you our KPIs. In fact, we have a model where we simulate it. But I just felt that's not the conversation for this audience. But we are tracking everything. One of the conditions, one of the principles that I had on the slide I didn't speak to for our committee is that we would not celebrate efforts. So even though you were thanking us, but for us, we thank you for thanking us. But we are not thanking ourselves with effort. We want to wait for the outcomes and the impact that those outcomes will make. And we are measuring every single thing is being measured. Maybe at some point what we'll do is, because the format for this committee is very different, and I think that Nigerians should adopt this format. On a normal day, a committee will tell you what government should do, write a report, and go and take photos and submit it. Now, imagine someone who was not part of that committee. They read your report, half of it, they don't understand what you're saying. After 4 years, you set up another Oronsoya review committee. For our committee, he says, so don't tell us what to do, be doing it. So that's why we're just doing it. When we are done with everything, we now write a report of what we have done. You'll find the comprehensive report, but that will be much later. So as part of that process, we would also make public the KPIs. So everybody can hold us to account in terms of what we promise. What is the timeline for VAT implementation and the other taxes? The original plan was that these laws will be enacted, and we have at least 90 days before January 1st. So that's why you see in the draft, we put January 1st there. But now we are obviously not on track. So we are optimistic that the laws will be passed this year. So we are looking tentatively at 1st of April as commencement date for the bill. But whenever it is that it's passed, you have a minimum of 90 days. The implementation of the fiscalization and the rest of it will happen as we build the capacity. Our estimate before the end of 2025. And I know someone asked the question about the capacity. I'll come back to that now. Measure to reinforce the reforms. Yes, that's why we're going all the way to the Constitution. In fact, one of our recommendations in the Constitution is that nobody, company or person, should pay any number of taxes that is more than a single digit. Imagine that this passes. You know what it means? You just sit down in your sector or your company or yourself and you just list all the taxes and levies they ask you to pay. Find out the date they were introduced. Count the first 9. Every other one, as far as you are concerned, is unconstitutional. And you can decide not to pay. Go to court 10 times, you win 10 times. Because we think, in addition to trying to put structures to make government do the right thing, we also need to empower the taxpayer to be able to protect themselves easily. And that comes from how you draft the law. So we've done a lot of structures from admin, from policy, from legislation, from the Constitution itself. And not perfect, but we think it should take us forward. The other one is, this our removal of consolidated relief allowance and all those relief. Why are we removing it if it's not doing any harm? So that's what I heard from my friend. And it's a very valid question. But what I'm saying is that we can leave this meeting now And I say, let me go and talk to the lawmaker so we can restore it. But the tax you pay will still be the same. Let me tell you how we did the table. We discussed first what level of income should be totally exempt, what level of income should pay less than they are paying now, and what level of income should pay a little bit more. That was actually what we discussed in the committee and agreed. We debated all the threshold, we used data, and once we landed, we built the template, the bands. In fact, we started first with the allowances and the reliefs. We did another version without the allowances and the relief. The one without the allowances and the relief was a lot easier. So my point is not that the reliefs are creating problem, is that it's not serving any useful purpose. Other than if you want to write the exam, make the exam longer. If you're a tax consultant, you have more excuses to charge your clients. Yeah, but honestly, people are not interested in allowances and relief. They just want to know how much tax do I need to pay. So we have taken the view that the model that has least complication is the one that is most appropriate. The ombuds and how they protect taxpayer, how would that work if the person paying them is also government? Good point. Our view is that we've created a structure. By the way, it's not novel. Right? Many countries have done it. So we've learned from what they've done, what hasn't worked. Spoke to the lady that started this in the US. They call it the tax advocate. Very interesting lady because they started as a private sector initiative. And then it became recognized by law. Today, they report to the Congress. So they sit with the IRS, but they are like the bosses. They have access to anything and everything. So we've learned from many countries. So the framework we created is government will fund it because you can't ask private sector to be funding it. They won't bring the money. And if they bring the money, you think they're influencing the ombud. So government still need to fund it. But the framework is who they report to, assets that they have, the authority they have is strong enough to protect the taxpayer. And what we've also said that is our committee will do the setup. Once the law is passed, we'll do the setup. We recruit the first set of people because who starts it matters. So if you get the right people to start it, they create a very strong structure and institution that all of us can also hold to account, by the way. Part of what we do is their reporting to the public is very detailed and it must be online every 3 months. So if they are not doing their job, let's all of us hold them to account. Excise tax simplification, especially for ad valorem, UCA analysis, yes, unit cost analysis for those who may not be familiar. How are we doing that? So we haven't done excise on tobacco, alcohol, and all the rest in these bills, but I'll tell you what we are planning to do. The plan is to allow this sector to breathe, maybe just allow them the whole of 2025 just to do what they are doing now. But in that process, we are developing a national policy on excise on those products. Today, we don't have a policy, right? So when government wants to increase the rate, you go and appeal to them, you negotiate, somebody gets confused, the other person is more confused, they come up with something, you live with it for 3 years. No, you can't take anything to the bank because depending on who is there in 3 years' time, you don't know what they will bring. So we thought that to solve this problem structurally and in a sustainable manner, let's develop a policy. If this is sweetened beverage and I want to tax it, should I tax the volume of this drink? Or should I tax the content of the sugar I want to tax there? Right? The same thing with alcohol. What if it's artificial? What if it's 0 content of sugar, but it's non-alcoholic beverage? Or it's alcohol, but it's lower? Why should I treat spirit? So there's so many things that goes into that. Should it be ad valorem? Should it be specific? Should it be a combination? At one point, should it be imposed? On what value? Who should administer it? So there are a lot of issues there, and we want to just have a framework for Nigeria. And one thing I can guarantee you is that the industry will play a significant role. We want to listen to you, bring data. We will argue everything out. At the end of the day, we'll say what is good for our country, and that's what we'll do. We had an interesting debate recently with some sectors trying to promote 20% tax on non-alcoholic beverages. They are so very aggressive with their advocacy. They say, see, we are not emotional, just being data. Now, their point is that sugary drinks cause diabetes. Okay? Can you give us the data? So sugar can cause diabetes. Then they have a broader communication issue around non-communicable diseases. I said, now you're complicating it. There is non-communicable diseases, and they're not all diabetes. So tell us what percentage of non-communicable diseases is caused by sugar. Okay? Once you find this, and what kind of sugar, God bless you. Once you find the sugar, you now say, this sugar, what is the source of the sugar that is causing the diabetes? There's the one that comes from carbohydrate, there's the natural one, there's the added one, there's the artificial one. I can just go now to my mom and pop shop, buy sugar, add it to gari, add water. That's sugar drink that I'm taking is sugar sweetening, right? I don't pay tax. So my sin is to set up a company and do a beverage. Say, tell us exactly. Maybe this problem you're trying to fight is 1% of the problem. So data will help us to develop a framework for that industry. So whatever work you need to do, I've given you the expo now. Do the work. You don't come with data, we are not emotional. You come with data, we'll respect it once we can validate. Once we have a framework, it means everybody can go and relax. You know what will happen, when it will happen, and how it will happen. The next one is, this one that we're doing technology and government is going to be connecting all over the place. Is it safe? Because that's what you were asking diplomatically. The answer is it is safe. The answer is that it will be safe. We are very mindful of what we are. You know, anything we are doing now is nothing compared to what we are planning to do. So we're very mindful of it. That's why I said to you that we're even starting with the guys who power those softwares and applications. And by the way, Nigeria is not the only country where they're doing this. How is South Africa doing it safely? How is the HMRC doing it and it's safe? So we're speaking to the guys who power those countries where they work very well. And then we're speaking to our people in terms of capacity building, access control, protocol for assessing it. And when you look at the laws, you see stiff penalties we've included there for individuals within the tax offices for violation of this kind of privacy and breach of security. Again, not perfect, but at least a framework that can take us forward. And then we build from there. Fiscalization of VAT and the fact that the experience with FRS trying to fiscalize hasn't really worked very well. Valid point. It hasn't worked very well because there's no legal framework. Many taxpayer was fighting them. I fought the FRS myself when I was in the private sector. It was Fowler. He called the big four accounting firm and said he wanted to do fiscalization. I said, you are starting with us. Do we look like the tax evaders to you? So we refused. The guy said, some aviation sector. I said, but that's aviation sector. Maybe they didn't understand what you were asking them to do. When you call the big four, you need to prepare because we know what we are doing. We refused. Now, why did we refuse? They were going to be using consultants. You send somebody to go and plug something. I don't know what they are extracting from my system. I'm going to be vulnerable. But now we have created a framework that does not allow the use of consultants. Government has to do it, and there are minimum standards. So which means we have more confidence in the setup. And therefore, you don't have a choice as to whether you agree with the government or not. The law says you must agree. Let's make it work together. So, but once you read the details of the law, if you have any specific issues where you have concerns, do let us know. We can take them forward. This global minimum tax. For multinationals, nobody is really complaining, per se. Local firm, we are concerned about the threshold. I tried to explain how we came up with the threshold. Is the abuse of waivers and incentive we are trying to curb. But we are open to discussions around the threshold. What we have actually put there is that the regulators, although I know you may not totally believe in it, we're saying that the FRS can increase, but they cannot reduce the threshold. So which means if you have more data, without going to the National Assembly, you can say this is 100 billion, no longer 20. But FRS cannot say 20 billion is too much, let's do 10. They can increase, but they cannot reduce. Because we talked about these issues. But we'll need data again to show that there are people who are 20 billion who are being punished by paying 15% when the rate is 25. And this is the justification. So if you have compelling reasons, I'll say why not. For gaming and excise on gaming, They pay other things to their regulators, and everything is just too plenty. How do we harmonize? So we're discussing with that sector. We think that the primary one should be the taxes. We shouldn't let go of taxes so that regulators can collect their own. No, it should be the other way around. Set the framework for tax, and then the regulators should stop collecting. So at the moment, there's withholding tax, which is not really on them, is on the people who win. That's the one we've done. The one in the law will not take effect until there's a gazette with a commencement date. The reason why we put that is so we have enough time to do all these back and forth with the regulators to stop the other payment they are making, ultimately to harmonize what they pay, but they have to pay. I know they don't want to pay, but they have to pay. Then there are issues to do with the absolute numbers. So this was another interesting debate we had at the committee. So when you put 10 million, 15 million here and there, and then after 5 years, it's looking like 2,000 naira, right? So we try to address that. In some cases, we put multiples of annual minimum wage. But I agree with you. There are instances where we haven't put any control, safeguard to make sure that is. So we'll think about maybe something in definition or transition. But if you have any idea of, because we don't want to be linking things to dollars inside Nigerian laws, it will look like you don't trust yourself. So we're looking for other things that we can use as a reference that is not too controversial or difficult to determine. We talked about, GDP per capita. We talked about minimum wage. We talked about what again? We talked about a few things. It wasn't very straightforward. This minimum tax and people who export and free zones, what will happen to them? If you are a company in Nigeria, do anything you want to do, including exporting. When you are done, come and pay at least 15% of your profit. That is our plan. That's what we have as proposals there, right? So if you are in Nigeria and you are doing only exports, just go to the free zone, isn't it? If you are in Nigeria and you are doing export, it means it's not only exports you are doing. So just give us 15% of your profit. Then, non-resident companies who create significant economic presence and all of that, should they do withholding tax? You shouldn't. If you are not on that list, don't do withholding tax. So what we've done is to create a list that says, if you are doing this, if you are doing that. But if you have a payment agent, that payment agent is in Nigeria, they have to do withholding tax. Otherwise, we'll create a loophole for you not to do withholding tax. So I'll just say, my name is ABC Limited, but I just find one guy who likes to make payments, he's paying for me. So we stop collecting withholding tax. No, we don't want to do those loopholes. Interest deductibility. We're not looking at how much you're paying, whether it's MPR plus, whether it's SOFA, whether it's whatever it is. Pay any rate you like. When you're done, we'll say, how much interest have you paid to a third party? How much interest have you paid to a related party? The total amount of interest you've paid, the absolute amount you've paid to a related party, what percentage of your EBITDA is that amount? If that amount is more than 30% of your EBITDA, the excess is disallowed and can be claimed for the next 5 years, provided that in every year, it does not exceed 30%. The reasoning behind it is that if it's really related party, and they're using it for a long time, that means you are thinly capitalized. What they needed to do is give you equity, not continue to give you a loan, because that allows them to extract too much before they pay taxes. So that's what we're trying to stop aggressive avoidance and planning. Should we still expect annual Finance Act? The answer is no. So that's why we also advise the government not to do Finance Act for 2024. We think the Finance Act is creating too much uncertainties. Last minute, you just see a new Finance Act, and you have to worry about what. So we feel like if you do this reform for the next 5 years, we should just be fine. After 5 years, you can do one review, amend a few things, and also wait again for maybe another 5 years. So our timeline that we recommend is 5 years for reviewing the laws. What happens to transfer pricing? We haven't said a lot about it. And so I asked a question about the Finance Act that were previously enacted. So all of them have been incorporated into the bills. If they haven't been incorporated, they become null and void once these bills are passed. So anything you can't find in these bills does not exist after the bills have been passed. So that's what we have done. Okay? I see you are feeling uncomfortable about that. Can you give one example you are concerned about? Yeah, so we've put it in the new law. So that's what I'm saying. Anything that we have now, we considered in writing the new bills. So when you see the new bills and something is not there, it means it no longer is not meant to exist after the laws have been passed. Okay. There's a question around transfer pricing. We didn't say a lot about it. So there's a whole section in the law on transfer pricing. But we also recognize that you must have a regulation that is more detailed. But the other interesting thing is that NOTAP will no longer be relevant. CAFA is gone. Right? So all those complications, go to a minister to get approval. Who does that? So those things are in the past or are meant to be in our past. These bills this is why we say these bills must pass. Right. So don't worry about those things anymore. Development levy is 4%, and that's high, and I do agree with you. What we're trying to do is to be mindful of the impact of our reform on government revenue in the immediate term. You know, some of the things we are saying that will bring us revenue without imposing additional tax burden will not happen in 1 year. If you drop government revenue significantly in year 1, we will be in trouble. So we're trying to face it. That's why even